We're joined from Sydney by Rory Robertson. He's interest rate strategist at Macquarie Group. So thanks very much for joining us, Rory. So the RBA held rates. Tell me, how concerned do you think they are about these international factors? Europe's sovereign debt crisis, a possible slowdown in the US and in China?
Well, I think it's probably one of the things that's helped squash the Reserve Bank's tightening bias for now. As you know, the Reserve Bank hiked 3 times late last year, 3 times earlier this year. It announced in May that phase 1 of its tightening cycle was over, and I think it probably assumed that phase 2 would get off the ground fairly quickly. But we've had the big downshifts in equity prices. We've had, a tightening in funding conditions across the world. So I think the Reserve Bank right now is very happy to sit on its hands and just wait and see.
Another reason to sit on its hands, or perhaps not to sit on its hands, is this underlying inflation that they say is at the upper half of the target zone. How much of a concern is that?
Well, I think it's one of the things that's been a theme in recent quarters, in that when the world was going to hell and the RBA was looking for a big recession in Australia, it thought core inflation would fall to 1.5%, and each successful quarterly update since then, it's revised up its its assumed trough for the unemployment rate. So now it's about, I think, 2.75% is the assumed trough. But markets right now are assuming that the Reserve Bank will be able to look through any disturbing CPI report at the end of this month, simply because right now the global economy does look like it's downshifting, and global markets are showing some stress and strain. So I think the Reserve Bank would very much like to be on hold through the rest of this year. So the next move in rates probably is up, but it's not going to be soon, I think.
So you say the next move is up, but of course, since the RBA has been one of the more aggressive rate cutters out there, they've actually got rate hikers out there. They've actually got room to maneuver, haven't they? Do you see a situation where perhaps the global situation deteriorates and we might actually see a rate cut?
Well, that's certainly possible. Australia and the Reserve Bank essentially are hostage to international developments. If global markets and the global economy can make Australia's life heaven or hell, right now I think the Reserve Bank is very pleased to have reloaded its monetary cannon. It's moved mortgage rates up by 1.75 percentage points. So if worst comes to worst, the Reserve Bank at least does have some firepower to support its economy should there be some real problems down the track, in a way that say the Fed or the ECB doesn't have any firepower at all. At least in terms of conventional rate cutting, the Reserve Bank has reloaded its cannon for that purpose.
Now, very quickly, Rory, the Australian government's going to want to cash in on some of this economic sunshine Australia's been seeing. Do you expect them to call an election pretty soon here?
Yeah, I do think we'll see an election called in the next month or two. We're basically due for one by the end of the year. We've just had a change in Prime Minister. The Labor Party has changed horses. Right now it looks like a smart move in the sense that the polls have it a bit stronger chance of winning that election. I think it would have won under the old Prime Minister, but the betting markets have it as an even firmer favourite under the new Prime Minister. So she's just basically tying up some loose ends, and I expect we'll see an election called in Australia in the next next month or so.
Yeah.
And I think at this stage the governing party looks like it's going to get voted back in quite easily.
Rory Robertson, interest rate strategist at Macquarie Group there in Sydney. Thanks so much for joining us.